Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 27th of January. Starting off with the FTSE 100, where we're basically testing the old resistance there back from May, 84.74, as new support, and so far the low 84.62, which is not great, but while we're above 84.74, we are looking for a continuation of the recent breakout, initial target 87.20. After that, the rather unlikely sounding 9,000 area, maybe that's for the end of March. On the downside, if we do break down, hoping that we won't get anything really lower than the 8400 zone, given that that was multi-resistance from back in May up to the beginning of December. Moving on to the DAX, and here it's also a case of pulling back a bit. So we hit the top of that rising trend channel, the October one. Are not really expecting us to going much above 21,000, and that's sort of proved to be the case. But a gap down there, slightly concerning. The top of the channel, the old channel from 2023, 21,300, and the obvious support now, 20,500 to 600, which is the floor of that red rising trend channel. Moving on to the Dow, which obviously we looked at yesterday, but nice to get a reminder. Here you can see that we managed to close the week basically near recent highs, but slightly off the best levels ever, just through 45,000. Likely support to come in at or above the 50-day line, 43,600. Anything worse than that, and obviously it looks as though we've got a double top in there for this market, triple top, in fact. On to Bitcoin, and here you can see that it's all about staying in the recent range between the 50-day line there of 99,000 and 109, which was the record high. Not much to say in the meantime, apart from the RSI still above neutral 50 at 54, which is positive. So we're half full rather than half empty. So any dips towards that 50-day line of 99,000 currently regarded as a buying opportunity, even though we've had a bull trap double top so far for January. On to gold, and here once again looking decent in the sense that we're finding support above the old 2750-60 resistance. Want to see now how far we can stretch this week. 2800, the record high there we had at the end of October, and 2970, the prize maybe for Q1 2025, if we can get a quick break of the 2800 area. Not expecting anything lower now than recent support and that broken October resistance line at 2720. Moving on to the stocks, and starting off with Active Energy, which has been a strange but positive situation in the recent past. Here you can see that we got this market, or the stock rather, finding support at the top of the old gap down there from back in June, so 0.19, and above that we've been looking for this market to head up to 0.37, which was the next gap up from back in April. Not expecting this market to go now below that 0.21 area, recent support, multi-tested support over the last week or two. Abingdon is next, and celebrating the grant that it's had, 800 grand I think from memory, and looking decent in the sense we've got this sideways shuffle at and above the rising 50-day moving average at 7.75 pence. Also had a couple of bounces near RSI 50 as well, so it looks as though the shares should be strong enough to head up to the top of the range, 11 pence maybe by the end of next month. Moving on to stock which I look at now and again, which is Cambridge Cognition, and here we gapped through the 200-day line, and then we gapped above it as well. Initial target here was 52 pence, and above that we're looking for 70 pence, maybe as soon as the end of next month, given all the gapping higher that we've had for the stock. I've covered Dukeman quite a few times in the recent past, and the faith in the coverage seems to be being backed at the moment. The only problem here, I suppose, is getting through 0.04. We need an end-of-day close above that, which is basically post-October resistance, to get up to 0.06 by the end of next month. What we don't want to see is any price action back below the 50-day line in 0.03. On to Greatland, which seems to be slowly getting there in terms of the breakout of the recent range between 6 and 8 pence. Nice little bull flag at the moment, 50 and 200-day lines rising. That suggests that 7.75 pence, the top of the range, and the red August resistance line should be a done deal over the next few days. After that, maybe 9.5 pence by the end of next month, I presume also helped by the recent recovery in gold. Hvivo looks like it's undoing the big breakdown that it had back in November, rather surprising one, with one of our favourite setups, which is a bear trap island reversal, so gapping down to new lows and then gapping up, which in fact it's done twice now, so didn't see the first one, I think, around 18 pence. Current situation is we're looking for the shares to hit the top of that falling trend channel from this time last year, as high as 27 pence by the end of February. Ideally, we stay above the second gap there, 19.6 pence. Immupharma is next, and here the shares also going to a golden cross and also trying to hit our target there near 5.1 pence. Hopefully that'll be done over the next week or two, and then ahead of that or above that, then we've got the next level up at 7 pence. But looking for 5 pence plus over the near term, especially while we remain above the 4 pence level, which was that resistance just last week. Moving along to Ilika, which has certainly regrouped over the recent past, breaking the resistance line there, with gapping through it, in fact, from back in March. And above that at 21 pence, we're looking for shares to hit 33 pence, hopefully by the end of next month or even sooner. And that's also backed by the way that the 50-day line is now rising quite sharply. On to Pensana, and here looks like a steady picture at the moment. A rising trend channel there. Top of the channel there, heading for 36 pence. I suppose you could argue that it's like that rather than the way it was originally, but heading for 36 pence by the end of next month, while we're above recent January resistance at 27 pence. One of the favoured stocks at the moment is Sealand, and had a RNS today. You can see that we've been in a rising trend channel from November. The floor of the channel there around 7.25 pence. Above that, the upside is still valid and potential 16 pence target by the end of next month. But the key here, I suppose, is holding that upside after the sell-off or profit-taking that we've had over the past week. Said before that the CEO putting in half a bar into Vast was a pretty good fundamental signal, as well as being a technical signal as well, in terms of the breakout that we've had since then through 0.11 pence on Vast. Above that, we've been looking for 0.21, which is the top of that broadening triangle from back in July. And in fact, if you're keen, you might even be looking for a bit more than that. The next level up here would be the upper parallel of that line, and that's heading towards the 0.26, 0.27 pence area. Be good to see decent end-of-day closes above the 200-day line, 0.15, over the course of this week, given that we haven't been above that 200-day line for a long time indeed, since back in the summer of 23. On to the last two. First one is a relatively new name, Watkin Jones, and here we've hit our first target there at just under 30 pence, above 30 pence, looking for the next level up as high as 45 pence by the end of next month. And this is a bear trap island reversal, so one of our favourite signals, and it is working well. I suppose the notional entry point there around 25 pence when the gap up appeared. And let's see if we can get some decent momentum there towards 50 pence as a best case scenario target. Finishing off with Zenith, which has been one of the stocks of the past month, and still powering ahead there. The target there up to 9.5 pence, while we're above 6 pence, and we've got a little rise today to celebrate that particular setup. That's it for me today. More updates tomorrow.